Today we cover three things: the current market sentiment and key flow signals, the most important news and regulatory moves shaping capital flows, and a detailed price action breakdown for Bitcoin, Ethereum, and the altcoins, plus clear levels and trade plans you can use over the next 24 to 48 hours. Let's get straight into it. Bitcoin is sitting in a delicate range right now. Price action has pulled back from recent intraday highs, and we're seeing the market test key support near the low 100K area. Volume has thinned during the pullback, which makes any break below support riskier and any reclaim above resistance more meaningful. Practically, if BTC can hold the 100K, 102K band and buyers step in with conviction, a clean retest of 105K to 108K becomes likely. If that support fails, expect a quick retest toward the 95K to 100K zone. Watch volume closely at those levels. Low volume bounces are more likely to trap momentum than to confirm it. Underneath the price moves, there's an important flow dynamic to understand. Despite some green on the price screens, professional money appears cautious. Recent reports show continued net outflows from digital asset funds in the past week, totaling roughly the low to mid billions. That's capital rotation that can sap upside even when prices briefly bounce. When you see outflows while price holds or grinds higher, treat that as a potential distribution phase. Smart money can be exiting into retail euphoria. This is not a call to panic. It's a call to respect risk and size positions accordingly. Sentiment indicators reflect this tug of war. The fear and greed readings this morning sit in the fear range, not panic, but definitely cautious. That's the environment where breakouts need strong confirmation and where false moves and squeezes are common. Use the sentiment gauge as a context tool. When fear is high and fund flows are negative, prefer defensive sizing. When fear rolls off and fund flows reverse, you can expand size. Don't confuse a headline rally with true institutional conviction. Those two things often arrive on different timelines. On the regulatory and infrastructure front, there's a structural story that matters longer term. Improvements in institutional plumbing are gradually reducing friction for big capital. This week's headlines around settlement and custody rails, approvals and pilot programs moving forward in major markets are constructive because they lower the operational risk for asset managers. That doesn't mean price rockets tomorrow. But it does mean the path for sustained inflows becomes smoother over months. Match your time frame. If you're trading intraday, the plumbing news is a background positive. If you're investing, it's a meaningful factor in allocation decisions. Now zooming into Ethereum, on-chain data shows renewed whale accumulation and structural bids building around the low 3K to mid 3K levels. Large addresses have been adding significant ETH over recent days, creating an on-chain support band that's worth watching. If that accumulation continues, and if DeFi activity and staking uptake pick up, ETH has the potential to trend higher into the 4K plus area on a sustained basis. The caveat is the same as with Bitcoin. Accumulation by whales is bullish, but until sustained inflows and volume confirm the move, price remains vulnerable to macro-driven drawdowns. Altcoins are acting like the first-place traders rotate when they sense a setup. Today, we've seen volume spikes in names tied to developer activity and protocol updates. Think of tokens that just announced meaningful upgrades or integrations. That rotation pattern is normal. Majors consolidate while traders hunt higher beta. If you trade alts, demand confirmation, on-chain volume, exchange flows, and dev announcements aligned with price are the ideal trifecta. Without those three, alts are just noise and pump and dump risk rises. Let's make this actionable with levels and scenarios you can use for trade planning. Scenario A, bullish continuation. BTC holds 100K to 102K for the next 24 hours. Volume ramps higher on upswings, and BTC reclaims 105K with conviction. In that case, look for a momentum entry on a confirmed retest above 105K, targeting an initial move to 108K, and then the next structural level in the 115K to 120K area. For ETH, If the 3.3 to 3.4K support holds and whales continue to accumulate, a gradual move toward 4.5K becomes the path of least resistance. Use staggered entries and tighten stops on partial profit taking. Scenario B, breakdown and rotation. BTC fails 100K, breaks to the 95K to 100K zone, and fund outflows accelerate. That's a risk-off scenario where you reduce directional long exposure, tighten stops, and consider hedges, options put spreads, or inverse exposure for short windows. In a breakdown, alts typically suffer larger percentage losses, so shrink size or move to the sidelines until evidence of accumulation appears. Protect capital first. Re-enter on signs of capitulation or clear accumulation by large addresses. Strategy by trader type, quick and practical. If you're a swing trader, your edge is time. Use larger time frame confirmations. Daily close back above 105K for BTC, or a confirmed higher low on the 4-hour for ETH. Keep position sizes manageable and use trailing stops to let winners breathe. If you're a scalper, target liquid pairs only, BTC and ETH, and keep stops tight. In this thin volume regime, false breakouts abound. Favor fade zones unless volume validates the breakout. If you're a long-term investor, continue dollar cost averaging into strategic support bands. Infrastructure improvements and whale accumulation are positive tailwinds for core allocation, but ladder your buys to avoid timing risk. Now, a short psychology segment, because your behavior will define your results more than your view. Two dominant emotions will fight for control this week: FOMO on the bullish headlines and fear on the flow data and macro headlines. When you feel FOMO, stop and ask, what's my stop? If you can't answer quickly, don't trade. When you feel fear, ask, am I following my plan? If the answer is no, step back. Discipline in both entry sizing and stop placement is the single biggest advantage you can cultivate. If the psychology content helps you, smash that like button and comment your one-line trading rule. Let's walk through the news that should matter most for market behavior in the coming session. First, the flow story. Weeks of net fund redemptions have been reported across digital asset products. This is a very real headwind when headlines turn bullish. It can mute rallies and increase volatility because liquidity is being pulled. That means each rally needs to be volume validated to count. Second, on institutional rails, approvals and pilot programs that reduce custody and settlement friction are moving forward in multiple markets. Those developments are structural positives. Think slow burn catalysts that make asset allocation easier for pensions and funds. They are not immediate price drivers, but over months, they reduce the friction that keeps large capital out. Watching policy and regulatory signals is critical because they change the risk premium institutions assign to crypto exposure. Third, on-chain signals for ETH. Large wallet accumulation is real and measurable. Several data providers flagged multi-$100 million moves into ETH over the last few days. That accumulation creates a bid beneath price and increases the odds of a controlled, less panic move higher if macro conditions cooperate. Keep an eye on exchange balances as well. Falling exchange ETH supply alongside whale accumulation is a constructive pairing. All right, practical checklist for the next 24 hours, what I personally will watch before taking any new trades. BTC 4-hour and daily candles, are we making higher lows? Volume on any breakout above 105K. Is it at least 20 to 30% above the 20-period average? ETH whale wallet movements and DeFi TVL changes. Are whales adding or selling? Fund flow reports and major exchange withdrawals. Big withdrawals off exchanges are bullish. Large inflows are bearish for price. Macro calendar. Any Fed headlines or surprising economic prints that could change risk appetite. Now some quick altcoin rules. Only add to alts when the following 3 conditions align: news or on-chain catalyst, positive net flow into the token, and clear price structure. Absent the trifecta, treat alts as speculative and size accordingly. Time for tactical entries I'll consider. Conservative BTC entry. Wait for reclaim of 105K with 4-hour close and volume confirmation. Scale in 25% at breakout. Add 25% on a retest. Hold the rest with a trailing stop. Risk-managed ETH addition. Add on confirmed hold above 3.3 to 3.4K with whale buying visible and DeFi inflows ticking upward. Use a stop just under the 3.2K handle. Altcoin play. Small starter position on a mid-cap with clear dev news and on-chain accumulation. Add only if exchange balances drop and on-chain volume rises. A brief word about leverage. Be extremely cautious right now. When liquidity is thin and headlines flip fast, leverage magnifies mistakes. If you use leverage, cut size and treat risk as the primary metric to manage, not potential return. Avoid overnight leveraged bets around major macro events. Let's close with a pragmatic view on time horizon. If you're a short-term trader, your job is to adapt to the volatility and protect capital. If you're a medium-term investor, the structural improvements and whale accumulation are reasons to keep building positions gradually. If you're long-term, ignore the daily noise and focus on dollar cost averaging into strength and weakness depending on your plan. Final quick recap. Sentiment is cautious. Flows have been mixed with recent outflows. BTC must hold the 100K band to keep the bullish thesis intact. ETH shows promising accumulation at 3.3 to 3.4K, and alts will react to catalysts first, so trade them with strict risk rules. If you want a template, my checklist is confirm volume, check flows, watch whale behavior, better probability trades. If this breakdown helped you, like the video, subscribe to Cryptoscope, and drop a comment telling me which coin you want me to deep dive tomorrow. I read the comments and I'll pick the most requested token for a full technical and psychology breakdown. Stay disciplined, protect your capital, and let the market prove your thesis before you scale. I'll be back with the next Market Pulse, same time tomorrow.